I don't think a single investor should have to roll the dice on their financial freedom.
Good evening, everybody. Like Renee said, my name is Zoe, and I'm an appraiser. So I'm going to start off the presentation by giving you my perspective on what the potential value implications could be as a result of rent control on your multifamily properties. And I'm going to start the presentation by giving you a little bit of a background on just trends that we've seen in rents and occupancy for multifamily in Eugene, Springfield, because that really sets up a good platform for the conversation of why rent control was brought to the table and also what kind of changes we can expect over time. And also understanding trends and what's happened in the past and what we see happening in the short term really gives you the tools for the risk assessment of your particular properties so you can really understand how vulnerable you will be to potential change. This is kind of an all-encompassing slide of rent trends in our market. The supply and demand discussion of our multifamily market is something I can talk an hour on, so I was trying to encapsulate everything that's been going on in this single slide and just give you a snapshot of what's been occurring in our market. And the real important takeaways of this is I'm sure all of you as multifamily owners and being involved in our multifamily market are well aware of rent increases that have occurred over the last few years. And this chart, both of these charts are taken from CoStar, and they're not going to give you particularly useful information on actual rent levels because they include all unit types, all ages, 1 bedroom, 2 bedroom, 3 bedroom in the entire city. But I think they set a very clear trend of what has occurred since 2014 down here up to 2018-19. And what I've seen since 2014 is we've seen rent increases upwards of 30 to 40% in Springfield and 20 to 30% on average in Eugene. And the reason that it's been lower in Eugene versus Springfield is Springfield has historically had slightly lower rent levels than Eugene, and there was a lot more opportunity for upward movement, particularly as the rents grew in Eugene and pushed people outward into Springfield. And the really important thing to understand about what's been occurring with supply and demand and rent levels is that the reason we've seen rents increase at this magnitude and at the same time we've seen vacancy decrease is because we have a very limited supply in Eugene and Springfield of new units coming online. During the last decade, you saw a lot of construction happening on the campus market, but we really didn't see from the recession in the last decade, we didn't see a lot of construction occur that wasn't University of Oregon related. And a lot of us have seen new developments pop up in the last few years. And I know the sentiment amongst folks that aren't necessarily tracking historic supply and demand is that, oh man, are we oversupplied? Are we bringing too many units to the market? But the reality is we had so little construction of market rate units during the last decade, and population continued to increase even during the recession. So we're actually fairly undersupplied in the Eugene-Springfield market compared to other communities that have more land available and that continued to construct over the last 5 years. And the real challenge that we have here locally is that we don't have a lot of development land available that is feasibly developable. And so as long as we are keeping that construction at bay, we're going to continue to have this problem where rents are continuing to increase because population is increasing and our construction isn't keeping pace with population increases. So the really important thing to see here down at the bottom that relates to rent control and what was recently passed is that the rent control legislation caps currently rent increases at 7% plus CPI per year, which is 10.3 for this year. So 10.3%, that's a fairly dramatic increase. And historically, even though you're seeing this 20, 30%, 30, 40% over the last 4 to 5 years, our rent increases over the last decade, over the last 20, 30 years, have not exceeded 5% per year. So when you're looking on the long range of your ability to increase rents, these trends might look really scary, but realistically, we haven't seen increases at above that rent restriction year by year.
I don't think a single investor should have to roll the dice on their financial freedom.